In fact, let's talk about all of that with Mayuresh Joshi from Angel Broking is joining us. He's the fund manager with Angel Broking. Mayuresh, good evening. Thanks a lot for joining us. What did you make of today's sharp rebound, and what would you attribute this kind of a move to?
Evening, Ajay. I think clearly, after every sharp fall that we've seen, you see some rebound happening with low volumes and high beta taking center stage. Clearly, I think the Chinese market not being in action for today and tomorrow, I think you're seeing some amount of bounce back happening onto the markets. But structurally, I think how long this bounce back will last, only in the next few days will decide. But clearly, I think not reading too much into the bounce back, at least at this point of time.
Mayuresh, would you say the bottom has been made, or can we possibly test lower levels?
So clearly very difficult to determine whether a bottom will be made, but another 4-5% correction is not ruled out, basically on two facets. I think on the macro scale itself, you're looking at very core weak data coming out, which will get reflected in IIP data to come through. And though government spending on the plan side has increased, I think the results will be seen in the second half of this year. Couple that up with the fall in raw material prices that we've seen both on crude and input costs for a majority of commodities going down, aiding a lot of corporate balance sheets. However, I think on the global side, there is still a huge amount of uncertainty on how Chinese data will pan out. That's clearly being reflected on how emerging currencies are panning out. And clearly what the Fed does in terms of their commentary going forward. I think there are key monitorable risks to the market in terms of keeping the markets in check. So at least from a short-term perspective, our own take is that there will be bouts of volatility in the market, and another 4-5% correction on the Nifty is not ruled out. But very, very difficult to predict whether the bottom is made or another 4-5% correction, the bottom will be made at that point of time. But again, for long-term investors, structurally, I think some money can start getting into the markets in qualitative sectors which have corrected meaningfully.
What's the sense that you get, after talking to your clients? Is there a willingness to buy at some of these dips?
So again, I think it is selective sectors that clients are looking at, and clearly I think if one really sees the carnage that has happened across sectors, I think there are a few pockets which still seem attractive. So for instance, I think the private banking space, which has seen huge amounts of correction in the carnage that we witnessed, I think they become good buying opportunities in small pockets. Specifically, I think if you incrementally buy 10-15% in banks like an Axis, ICICI, Yes Bank, our own take is that the earnings growth will be quite stupendous over the next couple of years. You need to leave aside these intermittent periods where you might see lower credit growth, asset quality stabilizing, some concerns probably happening in terms of how the NIMs and spreads will pan out. But clearly over a longer time duration, I think private sector banks, a few of the top tier IT companies, a few of the cement companies, I think these are pockets where we believe value still lies. And again, on any declines that you see in these pockets, I think some accumulations can be made.
Mayuresh, what we also saw in today's session was the way interest rate sensitive zones like banking and auto and perhaps even real estate, DLF was up by 10%, getting extremely strong in today's session. Do you think that a case for a rate cut is getting even more stronger, and that's why the excitement in that area?
So again, the expectations are running pretty high. If you look at the negative WPI print, if you're looking at how inflation is panning out, that is one facet the governor will look at. But again, I think the way the monsoons have panned out and the way Mr. Rajan has actually made statements in terms of how data points he would like to monitor, monsoons being one of them, indicates that there is a chance. So I think I'm not ruling out that the rate cut might not happen, but I think it depends on the quantum of the rate cut. So I think if a 25 bips happen, probably in September policy, I think that might leave the markets a little bit disappointed in my opinion.
Mayuresh, leave us with your thoughts on your specific overweights and underweights.
So clearly, as I mentioned earlier, I think the private sector banking side is where we are having our overweight rating on. Top tier IT companies is where we believe a lot of value lies over the next few quarters. Mid-cap cement over the next year and a half is where we believe the structural story lies. And clearly, I think a few mid-caps. So I think when you follow a bottom-up approach, a few mid-cap stocks like Inox Wind, Bajaj Electricals, even something like a Treehouse Education can do structurally well with expansion in earnings coming through, clearly getting reflected in margins and the bottom line.
All right, Mayuresh, we'll let you go on that one. Thanks so much for joining us on the show today.
Okay, thanks Ajay. Bye.